Hey folks, welcome to the Market Internal Review for June 5th, 2023. Today definitely was a very challenging day. Right at the open, we didn't really have too much of a gap up, but the price delivery was mostly atrocious, quite slow. The order book had very little volatility. The spreads were kind of wonky. On the open, trend was showing an imbalance. We also had average tick closures under zero. The ad band was red. Vold was a little bit bullish, but the trends, 20 SMA trends on both were bearish. We can see the session TWAP was essentially flat until about 10 o'clock Eastern Time. We saw no real representation of extreme move at the highs or lows. And notice here on the tick histogram, we had very little action on the upside, and we had a lot of action on the low end, but I mean, basically nothing, not even 500 breaks. I saw this morning and effectively just decided I wasn't going to try to do any kind of trades. We had some data releasing this morning, and it had almost zero impact on the markets. We finally start to see some 500 breaks a little after 10. We also start to see Vold closing below zero in the bearish area. And we had our first extreme closure on the bearish side. The price during that closure really just tested the low dip we had printed around 10. So to me at this point, I'm looking at this high print, I'm looking at this low print, and I'm just not seeing anything that really excites me for a trade. Yes, we had this extreme closure, but based on where the price was, it's not anything you'd want to short. In my opinion, anyways, this could effectively just be a test of recent lows. This is akin to a breakout style trade, and as I mentioned in the past video, the breakouts are rare. They don't typically happen, and look what happened, right? So if you would have chased this, yeah, maybe you could have made a couple points, but mostly, we regained that TWAP and took it to a rather choppy high standard deviation break. Not very clean action. And you can see the ad and the Vold bands. They're all mixing around with their trend, and tick is kind of all over the place, right? A couple bars up, a couple bars below, a couple bars back up. Not a quality kind of trade setup if you're somebody that likes to get into a trending move or even just get a couple bars in your favor. Today was just not it. Around that 12:30 time, actually a little bit earlier, about 12:15, we do get our first close up, extreme close up on tick. Now, if you look here, quite comically, I think the price essentially just tested that high wick that we printed in the morning session. I've said many times in my other videos that the first extreme closure on tick sets the tone for the day, typically. Now here again, where this occurred, right, was at the morning low. Then we get the other one here that tells us something a little different. We get another one, extreme closure up at the high from the morning session. So by this point, if you weren't already thinking it, you should be thinking range day. Yes, we're in an imbalance per trend, but we're seeing mixed signals all over the place on the internals between the ad and the Vold. This is a day where if you are somebody that is buying calls or buying puts, you have to be very careful, especially with 0 days to expiration contracts. They will rot before you see a good move in your favor, or it'll just reverse on you no matter where you enter when the candles look like this. 130, another time I have mentioned a handful of times on this channel, did produce a decent short that was finally in agreement with what ad and Vold have mostly been saying. Still not very clean. This one, again, you kind of just had to take a look at this and decide that today was more bearish than bullish and try to get a decent higher price for short side. But the delivery, I mean, look at these candles, just nasty. This is a scalper's day at best. Even better if you were somebody that was selling contracts, credit spreads, or something of that nature, that those people did well today during this kind of price action. So let's take a look at the tick levels here. With the exception of these ones down here towards the end of the day, like I said, mostly a ranged day, and the tick levels are showing that. These are mostly equally thick, and one's at the highs, one's at the lows. And we basically stayed within this area until, gosh, let's see, till about 2:30. If you were holding out for a range break of some kind, you really didn't get a quality one. Maybe if you were short side, you could have got some quick scalp down here. That looks a little bit more like chasing to me if you try to get short down here. And it looks like by that point we did get a couple of other extreme closures, and trend actually did signal balance here for a little bit. We'll take a look at those charts in a moment. Let's go take a look at the Qs. So Qs a little bit different today, and I think this is a good indication of why we had the price action we did on SPY. Is we definitely see similar moves in Qs where we get that 130 kind of short action. We do get that chop up, but Qs is a little bit more, making a little bit more of a move than SPY was. You can see the session TWAP was being drug up a little bit more aggressively than SPY. See, the TWAP on SPY is a lot flatter versus Qs. It's coming up a little bit more. We have more tick levels here, a little bit more distributed. When you get this divergence between the NASDAQ and SPY, the S&P 500, this is kind of what happens, where one will jerk one around and you're caught in the middle of a trade where it could have worked based on the price action and the internals, but because the indices are fighting against each other, given their underlying holdings, it causes a lot of weird divergence-based price action that can just really hurt. Look at the Dow. Okay, so Dow had a much weaker time here today, mostly bearish tick levels, still range bound, but a little bit more of a breakout. Still nasty price delivery. I mean, we got these big gaps in between the candles even. Ouch. No thanks. Check out the Russ. Okay, so Russ, more distributed tick levels, a little bit smoother price action, a little more distributed, oscillating around the standard deviation bands. Let's take a look at Apple real quick. So Apple had some news release regarding their headset for WWDC, their AR headset, and it kind of looks like the market either is selling, the buyers of the hype are selling, or there's a market participants that aren't thrilled with the announcements and the details. So it sold off really hard here at the end of the day. Very interesting. Look at chips. I saw chips today. It's kind of having a little bit of a flat day. Yeah, mainly range bound here. 145, 143, just zigzag right in between there. Not great. Nvidia, I think, was a little bit weaker too. Yeah, mostly the same as SMH, so still something to watch. Let's go look at tick. So reviewing tick today, look at the wicks here on tick. So first extreme close that we saw in the morning, then we get one here at 12:30ish. Then it just gets real fuzzy. When it looks like this, when we're stuck between plus minus 500 and it's not even the bodies are well grouped together like I've demonstrated in past videos, not a great day. This is nasty here. We don't want to see that. So here's trend. Massive gap down on trend. This is the bullish area, but given the price delivery on the indices, we can see here that this could be more read as a overbought situation. And I think anybody that's zoomed out and looked at the indexes, they can make that assumption that we're in overbought territory on SPY and the Qs. We've got pumped by Apple, we got pumped by Nvidia. Just perhaps a little bit time for a little bit of a pullback. We did try to break into the balance zone, which we had those 3 yellow dots on the MIT indicator around this time. We did reject, but ultimately, the trend today on trend is upwards. Looking at the ad, Friday here, we had that extreme upper bound close at the bullish area. Again, this is measuring the advancement of the New York Stock Exchange collection of stocks. and we had that high of 2,100 stocks trending bullish previous day on close, Friday last week, June 2nd. And just look at this. When I saw this morning, it was quite a shock. We went from 2,000 down to negative 430-ish. Quite an adjustment for the New York Stock Exchange. And we did slump off here, and then we had this weird uptick, and we had this old level that we've bounced off of a handful of times. So that came in very handy. Look, right where it rejects is that 340 area. Fizzles back out, but I mean, really just not clean price delivery. And even though this is trending up, we never really made it to the bearish area. This is not necessarily a bullish move. This is more of a retest of even the local highs from the morning open. Vold, much similar story. We had that tremendous pump Friday, just insane highs on the volume going into the advancing stocks. And then we open up today literally right in the middle. We oscillate around the middle, mostly in a balance, basically until that 130 time we start to break down and we head down into the bearish area where it starts. Given that SPY and Volt are in agreement here, I'm actually going to expect a little bit more of a selling move tomorrow. I do think that as Apple releases more WWDC content, it could make it challenging. I also will be looking for news release, data release, that kind of thing to gauge my trade plans. But yeah, today was definitely difficult. If you're somebody that likes to scalp some decent moves, none of this garbage in here was worth it. Let's see where VIX landed. VIX had quite the interesting day, just incredible lows. Still not the lows from last Friday, though. We ended at around 14.5, but we did start to make some good progress back down there. Puts versus calls here. So we can start to see this trending up finally. When we see that, it's typically, that the puts are being loaded. Now, when I see this, I don't really buy into the whole put side of things until I see this ticker over 1. I like to see this over 1 before I really start to consider that puts are really of any significance. So like here on March 23rd, we had a nice run up on PCN over 1. So if we go look at SPY, so if we look at March 23rd here, see when the puts are loading up and we're over 1 on PCN, we start to see a strong correlation with the price action. The rest of the time when this ticker's moving up, I view it more as the call side's selling or hedging, that kind of thing. All right, folks, I think that pretty much concludes the review for today. Hope you all stayed safe out there. If you have any comments, feel free to leave them below. If you have any feedback on the indicators, you can either leave a comment on the YouTube channel, any of the videos, or you can go to TradingView using the links from the announcement video for the indicators and leave a comment on any of the indicators if you've got a feature or an idea, anything you want to see. Otherwise, as always, thank you for watching.